The NASDAQ formed a bearish engulfing signal today, one of the 12 major signals. Did it right about the same level as it topped out before with a bearish left-right combo, which is a bearish engulfing signal after a doji. Does this mean the market's reversing? The benefit of candlestick analysis is that it allows an investor to analyze all 3 or 4 of the major indexes in a matter of seconds. At the same time the NASDAQ was trading off, the Dow was trading higher. What's that kind of imply? That just tells you they're not bailing out of this market, that they're just shifting funds from one sector to other sectors. Because candlestick charts are so easy to read based upon the signals and where they occur, whether in an overbought or oversold condition, it allows for the identification of which sectors might be coming back on strong. As we can see, crude oil has pulled back ever since it failed at the T-line. Now we have a bullish harami and bullish confirmation with stochastics in the oversold area. That just simply infers that the buying is starting to come back in, that we could be in the next wave to the upside or at least part way up. But that also gives you the impression or the implication that some of the crude oil stocks may now start back up again. Whiting, for example, is a very clear example where it had a nice steady uptrend until we saw a sell signal and a close below the T-line. It was time to take profits. But as soon as it came back up with, again, there's your bullish left-right combo, gapping up through the T-line, it's telling us they're still buying, that this may just be a J-hook pattern that is part way up of this long uptrend, or what we call a steady eddy, that the profit taking's over, the steady eddy should be continuing. Chesapeake is another example of what we call the classic pattern, coming out of a fry pan bottom. Notice the bullish Morningstar signal, the uptrend until we were way too far away from the T-line, start taking profits, knowing that if it came back down to the T-line, we could always buy back on the next buy signal. Notice our little hammer doji gap up. What's that telling us? This pattern setting up for another J-hook pattern, telling us that this uptrend right here should be the same magnitude as this uptrend right here. Because investor sentiment works the same way time after time, the candlestick investor has a lot of advantages of seeing when the buying is occurring and what type of patterns it's going to create. The benefit, again, of identifying the strong reversal signals. Notice in 5 and below, we had a little spinning top doji, a day of indecision, followed by a gap up. That's your best friend. We call it your best friend because the probabilities of not only being in an uptrend is strong, but being in a strong uptrend is extremely strong. So your stochastics coming up, can you always anticipate this type of move? Definitely not. But you can put yourself in situations where the probabilities are that you're heading higher, with one of the benefits being that this is the type of move that you're probably more likely to be participating in just because you can recognize what signals are occurring. That'll be it. We'll see you in the chat rooms.